All right, welcome to the daily market recap for Tuesday, November 4th. In today's video, I'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments section. Starting things off with the NASDAQ. Coming into the day, we had two gap ups into the resistance gap from October 30th gap down. Both times we sold off right from the open. And today we had a gap down that again was met with more sellers after a first 90-minute bounce, which was actually pretty impressive. Eventually we chopped sideways, rolled over, lost the VWAP, and closed right near the low of the day. Back under the 5-day, back under the 10-day. And then after hours today, we're down again right near this 20-day EMA and support gap here. So down 2% today, largest down day since October 10th distribution day. And for the first time, we've had two unfilled gaps to the downside almost in this entire run. So definitely a risk off signal there. S&P 500 also a secondary gap down, closed right into that 20-day moving average, down 1.2% today. A lot of the tech names got hit a little bit harder where money rotated into the rest of the market. So that's why the S&P 500 was relatively stronger on a percentage basis than the NASDAQ. But structure-wise, still just as weak. IWO, the growth stocks of the Russell 2000, gap down through the 5, the 10, the 20-day moving average, closed at the low of the day, right on the 50-day moving average in the top part of the support gap here, down 2.2%. And for me, when it's under the 20-day EMA, that's usually a risk off signal. So right now we've got a couple of gap downs on the indexes, risk off on IWO, and risk off on ARKK, which was looking really like nice and tight over the 20-day EMA. We had an ugly close on the 30th, followed by a gap up, and then a little volatility yesterday and rejection of that resistance gap. But today was kind of the nail in the coffin there. Big gap down through the 5, the 10, the 20-day EMAs. Actually closed back under the 50-day for the first time since this move started. When was that? The last time ARKK closed under the 50-day was May 6th. So just to show you the kind of distribution that we're seeing in a lot of the growth stocks, not the greatest action here, down 5.2%. Then we could take a look at Bitcoin. This undercut the $100,000 level at one point later in the day, got to 98.8K. A little bit of a rally back over that spot, and that was kind of a washout level. So I wouldn't be too surprised if we rally back up into the 5-day EMA or even the 10-day EMA. But overall, it's clear that Bitcoin is not in an uptrend here. Ethereum, very similar action, lots of weakness, closing under the 200-day moving average at this point. Just a lot of distribution, has been relatively weak compared to Bitcoin. And when we had caught data, we knew that Ethereum was over-owned, which caused a lot of the volatility here and overall weakness. Getting into the liquid leaders, I did take off a VRT. This had, as you can see with the chart, a gap down and close under 3 support gaps right at that 20-day EMA with its own gap down. And replace that with First Solar, FSLR, which has been one of the better acting stocks off the low in April from 122 to 266. And wanted to get a solar name on the list because solar stocks themselves have been acting really well since that April bottom. The rest, I'll sort this by price percent change. So First Solar was the best acting name today, still closing over that 5-day EMA, a little bit under their earnings close, but not so bad when it comes to the rest of the market. Google with a gap down and close under its high volume close from earnings, right at that 5-day EMA and support gap. Still some relative strength out of Google compared to the rest of the market. AMD, this was down 3.7%, and it's down a little bit more on earnings. NVIDIA down 4%, closing a support gap from October 28th to the 29th, back under the 5-day moving average. This now feels a little short-term topish. What we want to see is a close back over these gaps as quickly as possible, but given where the market has been already rallied to, and now that we're just starting to see some of the liquid names roll over, I'm not very confident in that. STX down 5.7%, closing under the 5-day moving average with its first unfilled gap down. SNDK with an unfilled gap down 6.1%, closing under the 5-day EMA. Nice closing range compared to the rest of the market, though. MU down 7.2%, 7.1%, excuse me, closing right at the low of the day under the 5 and the 10-day EMA with its own gap down. Palantir after earnings, which seemed spectacular. The growth rate was great, but it looks like it was kind of priced to perfection. We know that like price to earnings was super high, and that in itself isn't a reason to sell a stock because its price to earnings was very high when it was at $20, then 40, then 100. But eventually that does catch up to them. And this is the first time where good news has been met with poor price action, but still closing above the 20-day EMA. There's a chance that we like pull back into the 182 area, chop around there, let the 50-day moving average catch up. But also a chance that this is a false breakout and kind of a late stage base and really needs like a full on correction here. So we'll take that day by day. And then BE, another one with their first unfilled gap down, close under the high volume close from earnings, and that 5-day EMA down 9.4%. So first day that the leaders have been hit, going through my kind of 3-point checklist of when to get a little bit nervous about the bull market, and not so like the bull market is over, just more so like your checklist for the correction is one is positioning over 95% with the NAAIM active investors index. That's at 101%. So the average active investor is 101% long as of Wednesday's close. Who else is left to buy the market? Do we see unfilled gap downs on the indexes or multiple? We do on S&P 500, on IWO, on ARKK and IWO, or sorry, on S&P 500, NASDAQ, IWO, or RK. All of those have unfilled gap downs. Not a good sign. And then the last sign is damage from the leaders. Now, the leaders list, because it was so strong going into today, a lot of these are still over their 20-day EMA. It's still a lot are over their 10-day even. So today was the first day that we saw damage here. I hopefully it's the last. I don't feel like it will be though. But something that we want to keep an eye on is do we see more of the deterioration out of the leaders? Getting into the industry ETFs, financials actually really strong today, which was a theme that I was watching for weakness for a breakdown. But instead of money just like completely leaving the market, we did see some rotation into financials up 0.5%, reclaiming the 5-day moving average and a resistance gap today on a pickup in volume. Potentially, this is a higher low, and then we could start attacking this resistance gap. That is kind of best case scenario. Um, XLV, the healthcare ETF, really great strength, continues to close over the support gap and the 20-day EMA. Today, reclaimed the 5 and the 10-day on a closing basis with an uptick in volume. So a little rotation into financials and healthcare. ITB, the home builders ETF, just a little bounce day, still under the 20-day, or sorry, the 200-day EMA. Don't think that's very notable. And then on the weak side, PEJ, this is the leisure and entertainment ETF. So where do the average American spend money? Kind of on leisure and entertainment. And that's breaking down after the test of the 50-day moving average. Another cruise line reported earnings and they gapped down, Norwegian today. So some weakness here. ITA, aerospace and defense, which has been a leading theme off the lows. Another close under the 20-day EMA with its first unfilled gap down, so something to watch there. XRT, the retail ETF, more weakness down 1.5% with a large gap down. This looks like it's starting like a major downtrend at this point. Biotech, a little bit of weakness again today, close into that support gap, into that 20-day EMA. A little undercut and reclaim could be buyable there, but I don't really love all the volatility on high volume right off the highs here. KWEB, Chinese Internet ETF, a lot of weakness here as well. You would expect that after we had this big distribution bar on October 10th when Trump fired off the tweet about the trade war, and that trade war seemingly has been resolved, but now price action is breaking lower, which to me is kind of like a failed news event at that point. You would have expected these stocks to break higher. Now we're right back near that October 10th low. There are some Chinese equities that are holding up okay, but we definitely don't want to take out that level. Cybersecurity, close under the 50-day moving average. Still could be a higher low overall, and there's some stocks in that theme holding up. But for now, we've lost all the shorter term moving averages. IGV, same thing. Significant close under the 50-day here. This is the software ETF. ARKG down 4%, close under the lows of this pullback. TEM is gapping down overnight with earnings, so that's not great either. Semiconductors down 3.8%. First unfilled gap down, losing the 5 and the 10-day moving average, closing at the low of the day on a pickup in volume. Gold mining stocks, new closing low since that parabolic top. Nuclear and uranium, another gap down and close under the 20-day EMA, close right at the low of the day. And metal and mining just continues to waterfall down after it had a parabolic top move as well. So a lot of ETFs starting to break down, just a little bit of relative strength out of financials and healthcare. But for the most part, pretty weak day across the market. Um, Getting into the earnings calendar, we are right in the middle of earnings, so make sure that you know when the stocks that you own or want to own report. Tomorrow before the open, we have NVO, HUM, McDonald's, Unity, CCJ, SRAD. Those are kind of the ones that I would be interested in. And then after the close, much more important, Robinhood, IONQ, APP, Dutch Bros, QCOM, ARM, Snap, Figma, ELF, and then a bunch of other growth stocks the rest of the week. So just make sure that you know when the stocks that you own are reporting earnings. Speaking of earnings, just wanted to go through quickly some of the price percent changes in aftermarket hours. APPS, another monster move post earnings, up 24%. This stock, since it put in its low in November of 2024, has almost always dominated its earnings. We had a 96% up day once. We had a 56% up day the other time. The most recent earnings, though, we actually were up at some point and like right after they reported, and then ended the day down 14.5%. Still built out a higher low, and now again pulled back into the 50-day. This is trading up 24%, which would be, let's just check this really quick. uh, at 733. So just below the previous highs here. Lots of strength out of APPS. OUST up 11% after hours. LITE up 9, right near all-time highs. KGC up 1, beyond flat. Mara down 0.3%. AMD down 3.4%. TEM down 6%, ALAB down 9%, SMCI down 9%, KTOS, which has been a leader, down 12%, ANET down 12%, Upstart down 15, METC down another 15, Pinterest down 20, and AXON down 20. A lot of damage when it comes to these earnings. Like, not a great sign. Even with AMD, which had pretty nice earnings. I think they beat on revenue and earnings expectations, and they're getting sold off. So we had the market continue to climb the wall of worry as bad news came out. Prices still went up. Now we're starting to see good news get sold off, and that's usually a sign that the trend is changing. Getting into the long setups, I've got 12 to go over. None of them are A plus long setups. I'm not super excited about playing anything on the long side or really the short side at this point. The move has kind of been made over the last 2 weeks with breadth deteriorating in the market. A lot of stocks are already beaten down quite a bit. If you're going to short some of the mega cap names, but those are still showing some relative strength there. So getting into the long setups, Tesla has not been a stock to buy on strength because it's in this base. We're not breaking out. We're not trending. So when a stock's not trending, you don't want to be buying it on strength. You want to be buying it on a pullback. Last two pullbacks to the 20-day moving average has been followed up with a unfilled gap up. I doubt that that will happen this time with the Nasdaq selling off, but we'll see how the earnings come out pre-market. If anything goes on after hours, that brings the market back up. But I would be looking for an undercut of this 440 gap zone and then manage my risk against the 433 gap zone here, just as an undercut of the 20-day EMA and the gap there. Again, still not like a great setup. MU, we got the 20-day EMA and gap zone around 207. So look for another sell-off bar into that area. We look for an undercut and reclaim of the gap low right at that 206.40 spot. And then either the low of the day or a 2 or 3% stop would be the play there. CrowdStrike, one of the better stocks in cybersecurity, just made new all-time highs yesterday. Little pullback today, down 3.2% into the support gap in the 10-day EMA. Because we know the market is gapping down overnight, don't want to play the support gap a little too close, but the 20-day EMA and a breakout retest right around that 520 level is the spot that I'll be watching. Snowflake, we got the 20-day EMA just under the support gap. That would be the spot for an undercut and reclaim, 256.11. CLS has been nice and consolidation has been consolidating nicely over the 5-day EMA here. Today closed a little bit weaker in the range. We want to give it we want to basically shake out all the weak hands in this name. So undercut the support gap low, undercut the HVC and the 10-day EMA and right around that 320 level. Reclaim that would be the buy spot. It's a little aggressive for a buy spot. And given the market, I think a secondary one right at $300 and then that 20-day EMA would be a little bit better if you could stay patient. UAMY, a lot of the precious metal names have been absolutely brutalized. They were great parabolic shorts. This was one of my better trades on the uppercut and fail of 20 and then just completely fell apart here. Now it's kind of time to flip to the other side. At some point, the rubber band stretches so much to the downside that you will get a snapback rally. We started to see that with UAMY today with a gap down, open on the low, close in the better part of the daily range. That's why out of all the stocks, LAC, USAR, METC, for those, I think UAMY is acting a little bit better because of that closing range. So a little gap down and then a reclaim of today's close. So a red to green move would be the buy spot. And then my stop would be whatever the low of the day is tomorrow. And again, that is just for a mean reversion setup. I'm not thinking like, oh, we're going back to 20 on something like that. I would look to trim some into that 50-day moving average. And then eventually like all of it at the 20-day, which the 20 days declining. So probably get to around like $9 there. Guardian Health has been acting extremely well since their earnings, up 27% on earnings, up 6% yesterday, some great relative strength today. Unfortunately, they did a secondary offering and are gapping down. What I would be looking for is a reclaim of the low from their earnings day as a potential entry, and then get your stop at the 10-day EMA. If we open up like even a little bit stronger, then a reclaim of the high volume close would be the entry, then stop would be the low of the pre-market. But this is one of those healthcare related names, and healthcare is getting some rotation into it. So we want to keep our money in the themes that are getting rotation, and GH is one of them. Speaking of which, MEDP, MedSpace Holding, nice gap up on earnings, up another 9%. Since then, just consolidating into that 10-day EMA. If the market was stronger, I would say through the HVC level would be buyable, stop at today's low in the 10-day EMA. But the market is not strong right now. It's weakening. So instead of buying anything on strength, I would rather buy it on an undercut and reclaim. So an undercut of the lows of the pullback, reclaim that would be the buy spot, stop under the 20-day EMA. XPEV, we talked about this yesterday. One of the Chinese equities that is acting the best. On a weekly chart, it just really doesn't get better of a weekly base than this, multi-year base actually. And because we're in the base and we haven't broken out on volume yet, I don't want to buy it on strength. I want to accumulate shares as we pull back. And that's what I've been doing the past couple of days. Every time it's come into this like 2250 level, I just add a couple shares, add a couple shares, add a couple shares. If we get a little bit of weakness and then a reclaim of that 20-day EMA at 2250, I'll add even more and then get my stop at the 50-day moving average just under $22. That's only 2.5% risk there. And that would still be a higher low overall before the breakout. TTMI, this has been one of the strongest stocks in the market, and I don't see anyone posting about it. So those are the names that I would want to focus on when we do get a pullback. under the 10-day moving average into the support gap at $62, quite a ways away. So maybe something for like Thursday's trading, Thursday or Friday. But that's the spot that I'll be watching for. We do have our first unfilled gap down, but the accumulation volume the last couple of days versus the distribution today shows that if the market's going to hold in like at all, and maybe we just chop sideways instead of going down, then this is a name that as it comes back to that support gap and key moving average breakout retest, that would be a spot that I'd be comfortable buying. GTX next up, only setup that I would be comfortable buying on strength. And even then, like I don't feel super confident about it. Had a great reaction on earnings, up 19%. Next day, follow through up 14. And then we're getting nice and tight over the 5-day moving average. Lower volume today than yesterday. Yesterday up 2%, today only down 1%. Nice flag here. An undercut of the lows of the pullback would be a little bit better given the market strength right now. But I do have alerts just through today's high. Stop would be at that 5-day EMA at $17. Then last, we have ATEC. This one broke out of a 10-year base on earnings, up 16%. It's in that healthcare related area of the market, which again, that's getting some strength, getting some money rotated to it. Sideways action above the HVC the last 2 days while the market's been tanking. Good relative strength as well. So just a pullback into the HVC would be buyable versus that 5-day EMA right around 1840 as your stop. Then on the short side, first we have got Costco, and this looks like it's getting close to that stage 4 downtrend. We have multiple tests and failures at the 200-day moving average, which is now in a downtrend. We've got a couple tests of the 50-day, which is in a downtrend. And today we uppercut and actually closed well. And what I look for in these setups that haven't like purely broken into its stage 4 decline are these pop-ups to the 50-day moving average, just like a 1 or 2 day spurt of relative strength into that area. And what I would look for here is either an uppercut and fail, so where we take out the 50-day moving average, but ideally, if we could get a gap down, an opening range break to the downside, then we could manage our risk against today's high, keep it really nice and tight, and size that up because it is a slower moving name. BE, first gap down after a monster move. I mean, this year it's gone, well, I guess from last October, from $9 up to $140. At some point, it's going to need to base. Feels like the market is ready to push it into that base. We have our first unfilled gap down, which trends don't typically change until you get that first unfilled gap down. We finally got that today. Would just look for a little rally back up into the HVC, the high volume close from earnings. A failure at that area would be the entry or a loss of the daily VWAP, and then get your stop above that day's high or like a 3% stop there. But think that this at least has a date with the 20-day EMA at 113. So a nice, what would that be? Like 14, 13% pullback there. And then we'll go from there. HIMS was actually green at one point in the day and then reversed, closed at the low. So anyone who bought this in the morning is now underwater on the trade. And zooming out, kind of looks like we've got a test of the 200-day, a test of the 200-day, another test of the 200-day, and now we're breaking that. A lot of people trapped at these higher prices. If we start to break down, there's going to be some real selling pressure to the downside. Now, we do have this support gap here. We just had a weekday in the market and this closed week. So I don't want to be chasing this lower. I want to give it a little bit of a rally back up into what would be the 10-day EMA right around $45. The closer that we can get to the 200-day moving average, the better. Then I could keep my stop above that area and still manage the risk nice and tight. Carvana, this was on the short watch list coming into the day. Nice big gap down. Had a quick morning rally up into the 5-day EMA, failed, and then closed at the low of the day. This is a stock that's already made just monster move the past couple of years from $3.54 up to $400. Now we have our first gap down from earnings that didn't immediately kind of recover. And the average consumer is weak in America. We're seeing a lot of those types of stocks break down into stage 4 declines. This is one that I think can have some real unwind Would still look for a little bit of a rally back into the 5-day EMA at that 322 spot as a potential entry, so we could keep our stop over the 10-day EMA. I don't want to chase it lower here. Cypher, so far still showing relative strength, but one thing that you'll notice is as we get deeper into a correction, relative strength just is the next group to fade. And we saw that like throughout the market. We saw quantum names fall, then nuclear names fall. Well, sorry, rare earths fell first, then the quantum, then the nuclear. And then we started seeing some typical growth stocks. Eventually, we're starting to see some distribution on the mega caps. And now my guess is we're just going to see anything that's holding up as relative strength being used as liquidity to sell into that strength and take some profits while the market's starting to break down. Little uppercut and failure at that HVC from earnings at 2290-ish area would be the spot. Stay on the right side of the VWAP. All the good things will happen on that side on an extended name while the market's pulling back. So if we retake the HVC and stay above VWAP, do not stay short this name. It's still one of the stronger stocks in the market. But if it's time to unwind all risk in the market, then it will break under the daily VWAP and start to break to the downside. So don't fight the trend. Don't fight the daily VWAP. And then finally, MMYT. This has been one of the stocks that we've been stalking for a while. Got your nice big stage 2 uptrend, your stage 3 top, multiple tests and fails of that 200-day moving average, just like Costco, starting to decline here, and then big distribution on earnings down 10.25%, follow through lower down 4%, little rally back up to the 5-day, but you could see lower wick and weak close every single time here. We'll just look for another little rally into the 5-day and then manage risk against yesterday's high there. But once you start these stage 4 downtrends, they tend to get pretty ugly pretty quick, especially now that we have a market under pressure. So that's going to be the daily market recap for Tuesday, November 4th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great rest of your night, and I'll see you guys in tomorrow's video.